those year-end money moves to help lower your tax bill come April. And with the House and Senate getting much closer to passing a tax reform proposal, should that change your planning strategy at all? Good question that we want answered. And to do that, we have Bob Ingram. He's from the Center for Financial Planning. Some good advice, hopefully. Thanks for being here.
Thank you.
Appreciate it. So again, I mean, we're getting closer to the end of the year. Is there anything people should be thinking about, should be doing to get ready for 2018?
Well, a lot of things that you normally do toward the end of the year, if you haven't really thought about it yet, is just make sure if you're trying to lower your bill or try to reduce some of your taxable income, have you maximize as much as possible any deductible contributions to your retirement plans. If you get through the year and you haven't gotten up to that maximum level, which is $18,000 pre-tax, let's say in a 401k or your 403b, you can do that. Even if it means if you're able to, toward the end of the last couple of weeks, take as much of the paycheck as possible and direct a high percentage of it right to the retirement plan. Also, health savings accounts. If you have a high deductible plan with a health savings account, HSA, try to get up to the maximum contribution you can with that, possibly to lower some of the income. Look at your charitable giving. If you have gifts you're normally doing, maybe if you're inclined, it's the season for giving and making charitable contributions to a qualified charity. Is of course tax deductible and can add up if you're itemizing next year. And the other problem, which is a good problem to have, but challenging, is tax loss harvesting. In your taxable investment accounts, and we do a lot of this with clients, looking at the ability to say, are there any holdings where maybe you'd have a loss, you could take that loss and then offset any gains. Again, in a good market that things have been running up, you might not have as many losses, but it can help offset gains if you can do it, and then worry about it next year.
I bet you get a lot of savings that way. Maybe a couple thousand, $2,000, $3,000. Who knows? And that makes a huge difference, of course, as you head into the new year. And of course, we do know we are on the precipice of this bill now passing. I know they want to try to get it passed next week before the holiday. What should people know? I mean, is there something specific they should be doing, keeping that in mind?
Yeah, well, I guess there's a lot of different themes, and you still have to slice and dice a lot of the different elements in the proposal. But if you look at the tax brackets, so just for ordinary income, of course, we know the corporate tax rate is potentially coming down. Self-employment pass-through is a little bit lower for self-employed individuals. But the tax brackets are actually restructuring in such a way that many of the rates that you'd actually hit along the way up, so say that for a certain amount of income is up to 10%, then 15, then 25. Well, those numbers are changing a bit. So after 10, the next bracket is 12%, so a little lower than 15, and then 22% and 24% before you even get up to that 25, 28 and above. So your overall average tax rate, if you're in a couple $100,000 at least, is certainly going to go down. So if you're in that ability, if you're in that rate now or thinking you might be, it could make sense to try to defer income. If you have maybe bonuses that you don't have to take at the end of the year, it can make sense to really do that. Also, thinking about the different deductions that may or may be changing next year. You have the standard deduction, which is going to double. Now, personal exemption will go away, so that might mean people that would normally itemize, maybe it doesn't make sense to itemize because you'll be covered in the standard deduction. So taking advantage of some of the deductions this year that you can, and also looking even at things that might be changing a little bit, state taxes and income taxes. They're a little bit lower next year. You can't take as much of that out.
There's, of course, so many different ways. And sometimes people don't know what to do on their own. They need to reach out to experts like you, people that know exactly how they can, save, of course. So I'm telling people today they can go to the Center for Financial Planning and find out some more information. Of course, Bob Ingram, thank you so much for all the great tips.
CenterFinPlan.com.
There you go. We'll be right back.